This is my new volume indicator. I've written a program. I call it the volume accumulator, and it basically adds up or subtracts up um, the volume based on whether there's lots of sales, people are short selling or whatever. And I didn't like the VWAP indicator, which is standard. Most programs have the VWAP, which the VWAP is volume weighted average price. I didn't like that. It's just too inaccurate and inconsistent. So basically, I based the volume indicator in this graph is the blue line, right? And I basically I base it on my other indicators I have up here. The bottom row is black triangles, red triangles, and blue triangles. Blue means heavy volume, red means no volume, which we ignore, and black means it's like intermediate average volume. The next row up is volume momentum. So if it's like the volume's increasing, people get more and more excited, you'll see the green, and then you can see here the price it normally responds and goes up as well. In the red case of the red triangles, which is very low volume, my volume came here ignores them. So you notice down here that it's a flat line. Wherever you see a red triangles up here, it's flat lined here. Now, when you have a blue indicator, blue volume, which is high volume, and then a red momentum volume, that combination means my volume indicator, I'm going to subtract off a number. So candles that have like a blue, I give more weight to than candles that have the black triangle, because it's volume based trading. And you notice the price candles here, my volume indicator pretty much most of the time follows the price. So when the price goes up, my volume indicator goes up. Price comes down, my volume indicator goes down. Price goes up, my volume indicator most of the time follows it. Okay, when it doesn't follow it, that's when you can make your money. That's what I call divergent. The volume indicator diverges from the price indicator. So let me show you some examples. So you notice here that the blue line, the volume indicator goes down and the price is going down. That means they're basically going the same direction, so everything's working cool. You'll get a little bit advanced notice for day trading. Like, notice that the blue indicator comes up and then it hits a peak and comes down. And so you can get a little bit, sometimes a little bit of advanced notice that that's the peak. Might not still be clear here, but this down here, it's the peak. Anyways, so price goes down, but then the price goes up, and what happens to the volume indicator? It goes sideways. Why? Because we have red volume, which is like no volume. So what happens? The price is going up, the volume is going sideways, so there has to be an adjustment. And what happens is the price adjusts downward to go back to towards the direction of the volume, because the volume was sideways. All right. Now the price goes up and the volume goes up again. So you could basically have, if you wanted to, this is like you could have shorted here and bought there, and perhaps would have been a trade. I just wanted to show you how it worked. We'll look at a couple more examples. So okay, what's going on is it's kind of boring. You got the price going down, the volume going down, and they're just like matching. When one goes down, the other goes down. One goes up, the other goes up, until you get to this point here. And I'll zoom in so you can see the indicators a little bit better. Okay. The volume indicator is on a big old down spin, and the price has a couple up divots, down, up divots, down. So the and if you look when it so when it they diverge, for example, when the price is going up and when the volume is going down, that's what I mean by diverge. I want you to notice it up here in this case. The triangles are black and blue, red, black, blue, black. Anyways, so there's actually lots of volume shares are being sold or bought and bought. Lots of shares are moving. But yet we still have a divergence. And so this is just this means that there's going to be a bigger price movement than what you saw before. Because when you see these blue triangles, when volume happens, things are going to change. But this divergent thing is kind of cool because here you have the price moving in the wrong direction. So that means if you can, the price should be moving down, but it's moving up. So if you can detect the peak up here, that's when you can get in. And so then the price moves down, and then what happens? The volume moves down, and then the price moves up again, but the volume moves sideways. So again, that's a price divergence. So price is moving back up again. So the key then again is, and then finally it hits this peak here, and then the price totally drops, and that's the big thing you wanted to get, and you can tell it's a big drop. You know, these other ones are like up, little down, up, little down. But here's the big movement that you want to try to get into. So normal day trading. So this kind of gives you some advanced notice, and for sure advanced notice, because you can see the price going up. And so now, what you're doing is you're looking for the peak, right? And normally the way you find peaks is you look at the momentums. So like this whole thing's been going up and up and up and up and up and up, and you haven't seen a divergence yet, and you'll see the momentum's like green, red, red, green, red, red, green, red. So you're looking for the change from lots of volume, for example. And so here you have 1, 2, 3 blue triangles in 4 candles, and you'll see 2 red ones, and so the price dropped. So if you didn't get up into it here, it's like, oh well. And then you see some red dudes coming along, and now you see a green, and now you see a red. Okay, so now you again see the change from green to red, and this is a price divergence. It's like you know that it's got to come back down to meet, because the volume indicator says that it's going sideways, the price is going up. So as soon as you see this guy, you can get in on the next candle there at almost $20, like $20. And then the price goes boom, 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 boom. And you could probably get out here, or you could keep on riding it down until you get to the very bottom and get out down here. One way to get out is the same way as you get in. You look at the change from red to green, right? And you see a red to green here and a red to green there. And so the way you do it is you can draw a line, the support lines, and the price going down, and what you're trying to do is see if it comes back up and breaks back above it, or it can keep on riding it down. It goes to the next one, right? And then it goes to the next one. I'm just looking at these blue triangle candles with the blue triangles on them, and then finally this guy here breaks above it, so you could get in here if you wanted to. Yeah, that's a good price. 1974. So 1974, you just made 25 cents, which is on a $20 stock. So that's about 1.2% gain. I'll show you one more example. This has to do with day trading. A lot of day traders like to get on the action, at the beginning of a day, because that's when the action's at. That's when a lot of people are buying and selling, putting orders overnight. Oh, that's a good example too. I'll quickly point out there's a price divergence here. See, the price is going down a lot, and that's going down. Oh, that's not where the price divergence is. I'm sorry. The price divergence is here. The volume's going sideways, and the price is going down. That's where the divergence is. So that means the price shouldn't be going down. It should have been going sideways. So at some point, it's got to correct and go head up northward, because it's been heading down instead of going sideways. Has to correct. So here you see the two red momentums and the two green momentums. That means tides are changing, matey. So here's a good time to get in at 1854. You could get in at 1854. It's going to start heading up now. Or if you want to be safe, wait for the support line to be broken 1856. And there you go. Now it's riding it up, and you see all these green momentums. People are buying. So you're riding it up until you see a red momentum, which is right here. And so you got out at 1879. So you made 23 cents. So that would be something like 1.3%. So it's pretty exciting to use this new volume indicator in conjunction with my original day trading indicator. I'm feeling a lot better about day trading. I really have only done day trading live a couple times. I've done lots of paper trade, pretend trading. Okay, this is the beginning of the day example I was telling you about. Now you go into, but basically you see the divergence. The blue volume's going sideways, prices going down. We look for a change in momentum. The momentum's red here. We're looking for it to go green, which is there. So here's where we enter the trade, and we ride it on up, and we could get out somewhere over here, because this is our first red indicator. And this is another divergence. The volume's going sideways, but the price is going up, so the price has to correct and come down. So the price, you'll see now, the price does come shining down 50. So that's only about a 0.5% change. And you'll notice up here too, there's a whole bunch of reds. So it's kind of like a fake going down. It's not, in other words, since there's not been a lot of blues over here, you know it's not going to be a big profitable thing. Finally, we have a blue over here, and we also have a price divergence. See this? The price is going up, but the volume indicator is going down, and we got a blue candle. So this is like, we know some volume's happening, and then the very next candle switches to we got a green momentum and a red momentum. So that means that's the top. So we want to get in probably right there, and we can write it down. And make a small profit there if we want to. There's another price divergence there. Here's one. See, it goes sideways. And there it goes that way. So some of these, that last example we didn't make much of a profit, but we didn't lose anything either. You never know. Like on this one, you see you got a blue, the price divergence, and you have one blue candle, and then you have a second blue candle here. So this would mean you got two blue candles and two blue triangle volumes in 6 candles. So this one you have a better chance at getting a good gain. So you can see you got the green momentum and red, so that's the peak. So you can get in right here at 1955, and you could get out down here somewhere. 1933, that's a 22 cents. So that's a 1% gain right there. So it's 8 o'clock and we just made like 3 trades. One of them for 2 cents. Two of them were for like over a percent. So we made our 2% in an hour and a half. Okay, gotta stop. Gotta go. Bye.